Hey everybody, we're back with our Roundup for week 2. We really appreciate all the active participation this week in the discussion board. There were several really engaging discussions and questions that came through in the forums, which is always really great to see.
Yeah, honestly, one of our hopes as we designed the course is that it would not be unilateral, meaning us just giving content to you all, but multilateral in the sense that you're participating and engaging and pushing us as well, which really seems to be happening. So seeing this type of activity is really rewarding and gratifying for us because we think this is how some of the best learning occurs.
Now, we hope to continue that in the next module. So as all of you are aware, in Module 1, we provided a broad framework by which to analyze some of the core technologies at the heart of FinTech. And in Module 2, the first technology we really consider is blockchain. Now, from the comments in the discussion forum, it seems many of you have been thinking about similar questions. So we wanted to spend the next few minutes following up on some great questions and contributions that were made. So we want to revisit some of the discussion questions that we thought were really interesting and compelling in a few different ways. The first one that really comes to mind started off with a comment that Richard Stempfel made about the idea of free markets. And that generated a lot of back and forth between a number of course participants, including JStout84 and Peter-NYC, and a number of other student participants, which we thought was a really great interaction, the type of kind of multilateral discussion that we want to see hopefully generate in the forum. So Dave, what are your thoughts on this broader topic about this idea of free markets, how it operates in the context of some of the principles that we're discussing in the course?
Okay, so we're going to solve one of the great questions of capitalism and economics here in the next 5 minutes.
5 minutes.
Sure,
this
no
is
problem.
How we operate.
No, I mean, the underlying question, and first, maybe just as a side note, some of the comments are really, really well thought out, and so we appreciate the high level of engagement. I mean, it's clear that you guys are pretty damn smart, so we really appreciate the engagement. It's been really good, making us think a lot.
Yeah.
Okay, so free markets versus government regulation. This is the age-old question from an economic standpoint, and I think when talking about FinTech innovations, and especially blockchain, this is that intersection where I think people really start to have significant disagreement, right? Certainly within a government regulatory standpoint, that is the reason why most governments are weary of this type of, especially with cryptocurrency, right? Who is able to control it? And so one of the commenters, it was JStout84. I'm just going to read this because he had a really good quote from Thomas Hobbes. He said, quote, "People live nasty, brutish lives, always seeking to undermine each other," close quote. And he said, "Is it too idealistic to think that completely free markets can function for the benefit of all?" And I think, again, this is the question for this course. If you were to, people call it the fourth industrial revolution. I think from my standpoint, it's really just capitalism 2.0 or 3.0. Can we, as a global society, come together in such a way so that these massive, currently disparate resources can be shared in such a way so as to maybe not make complete equality, but make it so that people don't feel so disengaged, so separate,
or marginalized,
and then potentially, which obviously can lead towards violence and other types of challenges. I think that is the great question that the original commenter was asking. And I think in Module 5, we're going to take this question a little bit further and really look into that. So a lot of the FinTech innovations were started based on these broad questions of decentralization of power or democratization of finance, and really about eroding these power structures that have existed for centuries, sometimes a millennia. And the question that we have for you in Module 5 is, will governments, will large institutional holders of power like banks, will they actually allow that to happen? And I think, again, that is kind of the underlying fundamental question. I think to answer the specific question you asked, I don't think it's going to happen anytime soon, but it is really exciting. I think that the way I would flip it around is, if FinTech works the way that some people think that it will they have any power to stop it? Or is it just an eventuality where cryptocurrency, various forms of decentralized systems will make it so that the very concept of government or finance and stuff just becomes eroded and just transforms into something new? I think that's really, not anytime soon, but it's a very interesting kind of hypothesis.
Yeah, and so I think, maybe to piggyback on some of those points, ultimately it just comes down to a tension between where we think regulation plays versus where we think kind of this invisible hand idea, right, that Adam Smith talked about, and I think the way we think about it is they exist on a spectrum, and that spectrum can change depending on which industry we're talking about, depending on which country we're talking about.
Yeah.
And there's, which particular microcosm of the economy we may be talking about at a particular time. But do some new technologies that come into play, maybe some things we talk about Module 5, or things like smart contracts or other things that we end up touching on. How does that help facilitate maybe less friction in transactions, which is ultimately at the heart, I think, of trying to, at least one school of thought is when we bring regulation into financial transactions in the economy, this is one school of thought. We want to remove transaction costs as much as possible, but at the same time have a level of fairness and protection of certain players in the game as well. And so this is an interesting tension. Unfortunately, I don't think we answered it
no,
in
we probably
5
didn't do
minutes.
good. I mean,
Sorry.
again, you guys can answer these questions in the forum, perhaps better than we can. It's clear that you guys are really, really highly thoughtful on these types of questions. But I do think it brings up another thing that within the forums and within the questions you're asking does seem to come up over and over again. So there's this interesting dichotomy, or in Chinese they say 自相矛盾, these two opposing forces that a lot of you have identified in this kind of fintech space. And the idea is that on the one hand, we don't trust traditional financial institutions, maybe even governments, and so therefore we hope that financial technology innovations push us towards a more democratized, decentralized system. And yet when we asked you, who do you trust? It was
traditional financial
institutions, right? And the reason why, the underlying reason why, is because there wasn't a track record, and more importantly, there wasn't a regulatory structure that provided that kind of social safety net, the insurance, the other types of, basically that framework that ensures that if you invest in some, cryptocurrency or other peer-to-peer, whatever system, that your money will be safe. And I think this is such an interesting dichotomy that we're running up against as a society. And it leads into, for example, one of the things that we talked about this time, smart contracts. So we had people talking about how smart contracts could or would, or maybe even are, influencing their lives. And so a lot of people touched on real estate transactions. They touched on, related to real estate was the actual storage of documents like deeds and other land records in government systems. So what were some of the things that stood out to you in terms of some of the issues or ways that people saw smart contracts kind of becoming more relevant in our lives that you think stood out?
In terms of the relevance of smart contracts. Yeah, so I think, smart contracts, it's kind of almost like a buzzword. It sounds great. I think like a lot of legal structures or just law in general, we want to make sure that we get the right structure in place before we obviously implement full-time. And this is, I think, where some of the potential issues could come, because if we don't think about this comprehensively, then it can create potentially more problems than it solves, or at least they kind of cancel each other out. And so that's probably where the real concern is for me in particular.
Can I give a quick example of that? So one of the things that came up regularly in the comments was real estate transactions, especially the buying and selling of homes. And it was really clear that a lot of us are tired of paying all those middleman fees. We're tired of paying for real estate agents.
Broker fees.
Yeah, broker fees, lawyer fees. Like there's so many people in the middle that are grabbing pieces of that transaction. And so I think very naturally, because that is the largest investment that most people make, that is also the largest type of transactional fee that we tend to pay. And it's really easy to look back and say, well, I'm buying this house, I'm taking all the risk. Why in the hell am I paying this money, this fee to a real estate agent who just unlocked the door for me, right? And so it does seem very natural. Now, if you didn't remember from my background, my original kind of legal background was in commercial real estate. And so let me give you the flip side to that coin, because I think this goes exactly to your point. The reality is that real estate agent, an agent is a legal term, right? That means a fiduciary relationship, which we talked about already, this idea that it is someone who's put in a position of trust, and therefore they have a higher standard of trust and legal requirements because they are meant to be there to kind of help you and guide you.
And so normally when we talk about agent, we talk about principal and agent.
Exactly.
So somebody's delegating that trust, authority, power to the agent, right?
Exactly.
So in this case, the property owner.
Property owner or the purchaser.
Yeah.
You have to use an agent legally in many cases in order to go through that process. And again, it seems so unnecessary, and why would we pay that person for doing something so little? And just the one thing that I want you to kind of look at going forward is, you're not necessarily paying them that fee for what they are doing. You're paying them that fee in order to ensure they do something if it goes wrong. And this is the problem. This is why we have that same dichotomy with the traditional financial system versus kind of that blockchain-based cryptocurrency, whatever fintech system, is you are paying the lawyers, you're paying the title insurance company, you're paying the brokers, you're paying all of those people along the way to protect you if something goes wrong. Now, 99.999 whatever percent of the time, nothing goes wrong. And so therefore it seems like that was a wasted
cost.
Yeah, exactly, right? A wasted transaction. You think, oh my gosh, they got $1,000 for doing nothing, right? I can tell you though, as a former corporate lawyer in the commercial real estate space, it is absolutely money well spent most of the time. Now I'll give you a quick personal example. So my wife and I purchased a home at foreclosure before we moved to Hong Kong about 12 years ago. We recently sold that home in 2017, and when we sold that home, we realized, because the lawyers found it, that they had actually recorded the legal description of the land incorrectly. And because of that, they actually had to go and find the original owner, get them to sign a new deed, a corrective deed is what it's called, to have the actual the proper description on there. And if they didn't have that, then the buyer would not have been able to get all of their parties to line up, the mortgage company, the title insurance company, et cetera, and we would have been stuck with a house that we would not be able to sell, right? So on the one hand, it means that the original lawyers and stuff didn't really do their jobs, but on the other hand, it meant that because I paid these fees to these people, they were there to protect us. And I think, again, this gets at the heart. I'm not saying that they're worth all of their money. I'm not saying I don't also feel the sense of anger when I have to pay someone a fee that I don't really necessarily think that they deserve. And as a lawyer, I've been on the other end of that, probably received money that maybe I didn't deserve in a traditional sense. But the reality is the system is there specifically to deal with that dichotomy that we're now facing. We want that protection and we need it. But now technology could give us extreme efficiency, but with that efficiency comes less certainty and less protection. So the question is, how do we develop the efficiency while also maintaining the protection? I think that's really hard.
And I think
if it's self-executing, that's
right.
really
That's
hard.
very difficult. And so I think at the heart of a lot of the technology we talk about, be it from blockchain or AI-powered, kind of mortgage lending decisions or anything along those lines, I think the ability to have recourse is really at the heart of a lot of these things when we talk about free markets, regulation, the role of the law. How does that play in? Ultimately, at the end of the day, if something does go wrong, you want to be able to have some level of recourse.
Absolutely.
Ideally, being able to go talk to somebody.
Absolutely, yeah.
And I think a large part of
the bigger the dollar value is, the more you're going to want that.
Right?
Yeah.
And I think a large part of kind of the issues that we face when it comes to new technologies is that up till now, there's no nobody has really articulated a solution to what that recourse will be specifically. So if a particular, a block is incorrect, if whatever AI decision making that's going on in a particular company comes out for whatever reasons, wrong decision, what is the recourse to the person who's impacted by that? And I think, again, that cost, both in financial but in time, emotion, is pretty steep for the average person, right?
Very significant, yeah. So going on to some of the other comments that you had in regards to blockchain and the way that it could potentially impact our lives, there were some things that really stood out to me that I hadn't really thought about, especially in terms of my day-to-day life. So some commenters talked about traceability of products, right? So product liability is a very serious thing. You want to know that the food that you're eating is safe, or that the diamond that you're purchasing is accurate, or whatever, like it's described accurately. And there were some really interesting descriptions about that. So here in Hong Kong, someone mentioned the milk powder, which is sometimes difficult to trace, and there have been concerns over milk powder.
Baby milk powder.
Baby milk powder. There's some concerns several years ago about the source of milk powder and what it contains. And so maybe if there's some traceability on that, maybe in terms of fair trade, things of that nature. One thing that wasn't mentioned that I thought would come up, because this has come up kind of globally in certain contexts, is actually voting. And voting not in terms of cryptocurrency, which we did talk about, but actually voting in terms of political elections. Yeah. The immutability of the blockchain does mean that theoretically, if you wanted to increase the number of voters, then the best way to do that is to not make them physically go to a polling location, but let them do that on a mobile application somehow. That didn't come up, but maybe throw that back at you. Is that something you think that governments would potentially allow at some point?
So I think the other thing that's really interesting when it comes to blockchain and application and I think one or two commenters did talk about this, or alluded to it at least, is the idea of like property records or title. Like, how do we keep track of that? And this is obviously super important for governments as well as homeowners, like you're talking about in your own personal experience. I think in a lot of places in the world, particularly where database records are not as comprehensive as people would hope they would be, or not as clear, one solution that people are hopefully pointing to is blockchain. And we see this in countries where that title record or the deed record is really, let's say, spotty in some senses, and if you were to be able to get that in place, then you would be able to clarify a lot of potential issues and unlock a lot of value for people that own this property to be able to utilize it in different ways. The real kind of impediment, or at least one of the key impediments in actually doing that, though, is putting the right records in to begin with.
It has to be proper in the first place. Otherwise, you're just going to have like immutable bad data.
And then going back to try to fix that goes back to what we were talking about. So,
and I don't think many of you perhaps realize how inaccurate a lot of real estate records really are. Or maybe maybe you do recognize it, and that's why you're suggesting this. But just taking Hong Kong as an example, it's one of the most modern economies, of course. And as a Commonwealth country with the legal system where it kind of stems from the UK system, that means if you studied in a common law, or if you worked in a common law country as a lawyer, then a lot of your legal training can get transferred over. The vast majority of it gets transferred over. But here's the thing: every single lawyer, even if you went through the Commonwealth system, or the common law system, has to take the conveyancing course, because the legal conveyancing.
So what's conveyancing?
So conveyancing is when you transfer ownership of real estate to another person. It's so messed up here that everyone has to take it.
They have their own course that they have to take.
Everybody, no matter how much experience you have. So I, as a former commercial lawyer in a common law country that has the same legal background, they said, if you're going to get this transferred over, you still have to take this conveyancing system or course, because it's so different than everywhere else. And the rumor is, I don't know if this is true, but the rumor is that if you look at the deeds, if you go back far enough, any property in Hong Kong, you could say there's like a conflict in terms of ownership. And again, I'm not saying that's true. The point is simply to show that
even in sophisticated markets,
where they've been keeping records a long time.
And so if you think about markets that are, for whatever reasons, less sophisticated, then there'll be a litany of greater issues to address.
It's almost like the less developed it is, the more likely it could work, because then you almost have a clean slate.
And this is a real difficulty in a lot of places in the world when it comes to real assets, particularly property, and how those are going to be conveyed or sold or used. And to get clarity on this would actually help a lot of these countries and economies.
Oh yeah, a ton. And so going back, we mentioned voting, although in the political standpoint, but voting did come up in this module, so we want to talk about that briefly. One of some of the more interesting conversations I thought were, again, very clear that many of you understand this as well or better than I do, especially on the technology side, was about the blockchain, and from a governance standpoint, the voting mechanism whereby blockchain is controlled. So we mentioned that the majority of blockchain and cryptocurrency is typically governed under a one vote system, or majority rule system, excuse me. And we talked about, is that the best way to do it? So what were some of the ideas or thoughts that came up?
So I think the great analogies that usually come up when we talk about how blockchain is governed, or how these different almost like industry groups, right? Because there's all of these kind of different kind of communities of different blocks and chains and applications that are out there. The initial analogy is always to kind of corporate law, right? And so the principle of majority rule, besides probably your elementary school teacher using that to say, hey, what are we going to do next? Are we going to go to recess? Are we going to eat our snacks? I'll let you vote. Beyond that, right?
That wasn't my elementary school. She was a dictator.
But beyond that, corporations as a general rule, one share, one vote, which we mentioned in our course, and and this is something that somehow is ingrained both in the political side of how a lot of nations govern, but also on the corporation side. Now, obviously, there are exceptions to that, and some of the commenters had some great points related to that with respect to, hey, what would be the alternatives? And so, we think of supermajority voting in the case of like special resolutions, which usually require, a supermajority, which could be, 75%. And then is that the criteria we want to use if we want to fundamentally change things? Or, other people talk about cumulative speculative voting, where people could load up votes on a particular item, so to speak, and then just concentrate their votes, which would help kind of smaller minority type of voters. And these are really interesting discussions to have and to think about how we want to govern these things. But because we know, at least in certain types of kind of blockchain communities, so to speak, that there's some concentration of power by concentration of either the tokens or whatever they're using to govern to use as their votes. Let's say how many votes are you going to have.
Well, and so this kind of came up. So in case you're not going there, several people mentioned a quote 51% attack.
Yeah.
What is that?
Yeah. So 51% attack is a little bit different in the sense. So it all falls under the umbrella of governance, but it's a little bit different in the sense of pure voting. So in the sense of either. So when we were talking about how, for example, Bitcoin, so if we use that as an example, there are a number of computers out there, large, kind of oftentimes very focused, special computers out there that are doing mining to calculate, kind of some sort of mathematical problem. And when that's solved, it pops out a coin for you, basically, right? And the idea of a 51% attack, or what that relates to, is unless somebody owns the networking power in that particular chain of over 50%, so once they get to 51%, they could actually change the records in the ledger. So in the blockchain ledger, they could change the records. Now, until you hit that threshold, you normally can't. And so this is what they were talking about, the 51% attack of. Is that a risk, basically? And certainly in certain communities that is going to be a risk, particularly ones that are not distributed. So there's that side of it. Oftentimes on the voting side, what you happen is, if miners, for example, are mining problems, and as a reward for mining the problem, they get a cryptocurrency of some sort. Now, sometimes certain communities will use that as the voting metric. So if you've got if you've been able to pop out 100 coins, and you have 100 votes maybe to decide how things are going to work out, if we're going to go this way or that way on a particular problem. And so I think those are where those two things are linked. And but I think on the terms of the voting, if we go back to I've got X amount of coins or whatever, then should I be able to vote one share or one vote per whatever I have, or should there be some other type of a system in place? And I think this is where the comments and the debates were when it came to that.
Yeah, and this actually relates to, it may not seem, when we threw in the section about the environment and we talked about electricity, we probably didn't do a very good job of making it clear how related these two parts are. So let's just talk about that just briefly. So we talked about the electricity component to talk about how the utilization of new technologies can have broader implications, often negative, and so therefore we need to think about those implications. But here's the connection to the governance part, which we didn't really explain very clearly. The idea is, if it requires a lot of electricity in order to mine these coins and to gain some level of control, it also means that the people that are going to have the most control and the most shares of that, whatever the crypto or blockchain is, are also going to be the people that have that greatest access to the electrical system. And so what many of you may not realize is that a lot of the people that control big percentages of coins and other kind of blockchain-based systems are actually quasi-governmentally connected, either through personal relationships or actual government support, where they can just use massive amounts of cheap electricity in order to mine. They have massive mining farms where they'll mine these coins. And so that means that you have, if a government, let's say, or someone connected to someone in power, wanted to gain control over those things and they had that massive ability, then they could theoretically gain some level of control, maybe even majority control, and change the rules within that system.
Sure.
And so this is an interesting, again, this paradox where it's not like one coin, one vote system where all of those coins are distributed equally around the world. It's actually those that have literal access to power, in this case electricity, are oftentimes the ones that then get to write the rules for those things.
And so there's definitely a connection between those things. And I think if you're the average cryptocurrency enthusiast, where you're buying fractions of Bitcoin or Ethereum or whatever, these are things you generally don't think about. But I think clearly in a macro sense, there are definitely kind of socio-political and socioeconomic links that are definitely driving, or at least providing the structure to the market that is that we kind of play in, right?
Exactly.
In the context of blockchain and some of the other technologies and themes that we end up talking about through the course, we often talk about remittances, particularly overseas remittances.
Yeah.
And I think you had an interesting experience with that recently. So
I did, yeah. So this is one of the areas, again, probably because my interest in migrant workers and trafficking and other things in that area, that I personally am really excited about from a blockchain perspective. The idea of someone being able to transfer money peer-to-peer very quickly, perhaps using a mobile device instantaneously with very, very low fees. I'm super excited about that. Not possible for everybody yet, but I think within the next 3 or 4 years, certainly 5 or 10, it will be available to pretty much everybody, assuming countries allow their currencies to be converted and whatnot. But so this week, I actually just by happenstance was in a position where I was transferring money to a friend of mine in the Philippines. And so I had to physically go into the downtown portion of Hong Kong. I had to go to this place called the Worldwide House. I had to write out something on paper in this really old form, which, by the way, they messed up anyway. And they actually took my name down wrong on the transaction form, even though they had my ID and everything. And it was a cumbersome, expensive process, relatively speaking, right? Now, the money made it there. And so I think if you think of the past several decades, these remittances have allowed migrant workers to really spread out across the globe and provide for their families and friends really from everywhere. And so it's amazing in that regard, so don't get me wrong, but I can see what's coming next. And I can think about, as David, you said in the module, even if you can just decrease those fees by 1 or 2%, you're talking about billions of dollars going to the developing nations of the world. So I think it's really, really exciting. So what I did, I never do this, but I actually took my phone and kind of filmed using a little vlog or selfie, whatever it's called, whatever the kids are calling it these days, and made a little video of myself. We're going to put that together and then send that out to you as well, so you can kind of see what we're talking about when we talk about the remittance process.
Yeah, and so overall the experience was?
Well, I've done it enough times that it was to be expected. I mean, it was not good nor bad. The money made it there. I'm grateful for the process, but I'm really excited for the day when I can just do it on my phone.
Sure, great. Well, that's it for this roundup. Thanks again for your participation and contributions. We've thoroughly enjoyed reading the comments and discussing the ideas amongst ourselves as well, which we frequently do after reading them. We'll ping each other or talk to each other if we see each other.
There's a lot of questions. I have no idea.
Yeah.
I'm like, oh, what do we say?
These are really great insights that you all are sharing with us, which we really appreciate. Now, moving on, in our next module, we're going to explore cybersecurity and crime, which will build on what we've already covered in modules 1 and 2. So we look forward to seeing all of you again in our next roundup after module 3.